Hi traders, welcome back to my channel. I'm going to show you how to use the simple and most effective exponential moving average for scalping and positional trading system. Many of them were asking me about the strategy I use on Twitter for my trading. So I created this video for educational purpose. Hope this helps to clear your doubts. I've been using the strategy for over 5 years and it appears to be more effective, having 75% accuracy result with a risk reward lies between 1:2 to 1:5. So in this video, I'll demonstrate the indicators and the settings used for the scalping method. To achieve a high success ratio, I utilize one leading and one lagging indicator. The leading indicator is stochastic, the lagging indicator is exponential moving average. This is how ultimately looks as a result after applying the changes. Now coming back to the settings, how I add the indicators into the settings. The moving average. So the moving average helps us to identify the recent change of the price action and helps to identify the trend detection by removing the fluctuation and emphasizing on the long-term trends. I use 20, 50, 100, 200 exponential moving average for my scalping technique. So the second indicator I use is stochastic. It helps to identify the overbought and oversold of the recent high and low prices. The key advantage of using stochastic indicator is to recognize the pattern, whether the overall sentiment of the market is moving upward or downward, or is it in a range. And it helps to identify the overbought or the oversold zone. And also the divergence using the stochastic oscillator, whether is the price and the movement of the direction, is it aligning with how it is moving, or is it moving into the opposite direction. And I'll come back to the settings what I use, and I use this condition under a different time frame. I use it for 1 minute, 3 minutes for the scalping technique, and for short term you can use 5 minutes and the 15 minutes, and for positional you can use 3 hours and 1 day. And this is how I use. So you will have to go to the search and identify the first indicator, moving average exponential. I select the same indicator 4 times so that I can able to utilize the moving average under 200, 100, 50 and 20. For improved visibility, I am adjusting the line colors width, making it more visible. Changing the color so that it is very clear for to identify whether it is a 200, 100, 50 or 20. I'm just changing the length, making it in blue color. Red is 200, blue is in 100. Now I'm going to set it up for 50. Change the color, making it visible in white, and the thickness. Now doing it for 20 EMEA, changing the length and the color. Now the settings for exponential moving average is ready. Now I'll use the second indicator, which is stochastic. Type in for the stochastic, you will find the stochastic. I'll do a small tweak to the change. Right click settings, change the percentage length, which is the period, to 21 from the default settings of 14, and the smoothness to 3 period. Now you will see a more smooth and aligned pattern in the stochastic. So your oversold is 20 below and overbought is 80 above. Now the settings are ready. Now we will move into the entry points, how we will demonstrate taking the entry. So for entry, your 20, 50, 100, 200 has to be in a slope. It should be aligned between 30 degree to 60 degree. So which means we are trending in a bearish market. Now you can see on Friday we were in a bearish market and it continued to be falling. And now under the 20 moving average, the entry signal would be near the 20 moving average because we are in a downtrend, and I look for the stochastic crossover, and the risk reward is 1:2. So now the trend line of support is breaking and a crossover is making along with a 20 EMA grazing. So a red candle and a stochastic crossover, and I take an entry just below breaking of the support or near the trend line of 20 EMA. The next trade would come near my 50 EMA. So once the 20 EMA is done, the next trade would only come near the 50 EMA. So I pick the 50 EMA. Again, it will take a bounce, means it will go to the support zone, then it bounce. Then the third trade would come near the 100 EMA. So again, if you see 100 EMA, I pick the trade, and near the stochastic crossover, it gave me 1:2. So minimum of 1:2 to 1:5 can be expected based on the trend, how it is making. Now I'll show you in an uptrend, the bullish market. You can see that it is all the indicators are showing sloping towards the bullish 20, 50, 100, 200. Now I'm taking an entry near the 20 EMA crossover. You can see now the 20 EMA crossover has gone and stochastic crossover is making, and I'm making a risk reward of 1:2. You can go until 1:3, 1:4, depends on the bullishness. You can trial your stop loss, but my scalping I would be using 1:2 for all my trading entries. If I'm more convicted, I'll go for the higher range. So I hope this video is useful, and if you think this is helpful and you can share it with your friends, click like and subscribe button to support me more. You can ask your question in the comment section and I'm happy to help you.